Welcome back, y'all. Greg Silverman here from Atlanta, Georgia. Drink Coca-Cola out of bottles instead of cans. I guess is good for the environment. Another section of Come Learn With Me. One of the articles that percolated. It was only a matter of time until something about Evergrande percolated up. So it'd be interesting to read it. If you want to know how do we implement our investment choices, stick with us to the end, and I'll flash a URL that you can follow and come learn more. The Evergrande crisis, 4 questions that explain why China's property market, which is twice as big as America's and where 20% of homes are empty, matters. This is from Business Insider, an Indian website. They sometimes do some good stuff. Evergrande housing complex. Evergrande, China's embattled real estate giant, is on the brink of bankruptcy. It has 1.6 million undelivered apartments and is more than 300 billion in debt, making it the most indebted company in the world. Doubt that. Oh, 300 billion, I guess. Yeah. Bankruptcy could be a disaster for Chinese homeowners who hold 70% of their wealth in real estate. All right. Oops. Evergrande, the second biggest real estate developer in China, has been dominating headlines for weeks. The company has more than 300 billion in debt, making it the most indebted company in the world. It also has 1.6 million undelivered apartments hanging in the balance. The global conversation around Evergrande has turned to a series of big questions, including whether China's central government will bail out the giants and what Evergrande's long-term impact on the real estate sector will be. While analysts are now overwhelmingly predicting Beijing will not bail out Evergrande, Dr. Xing Sun, a senior lecturer in Chinese and East Asian business at King's College in London, told Insider the long-term impact on the housing market and the entire economy is still highly uncertain. What we see at the moment is that people are losing their previously very strong confidence in the real estate sector, Sun said. The main concern of the central government is trying to limit the contagion effect of an Evergrande collapse, if it collapses, from spreading to other developers. Confidence. Okay. How big is the Chinese real estate market? It's big. China's real estate sector is huge. According to Goldman Sachs Group, the total value of the market hit 52 trillion in 2019, twice the size of the US residential market. Wow. The Wall Street Journal reported the sector accounts for 29% of Chinese gross domestic product, and its cities are growing rapidly. In 2019, China recorded a 60% urbanization rate. All right, we'll get those stats in the record. But a lot of that real estate is empty. An estimated 65 million homes, 20% of the total supply in China, are unoccupied. Wow. Not only is this high, but by international standards, it means there are enough empty houses in China to house the entire population of France. Wow. Home ownership rates in the country are also high. More than 90% of households in China are homeowners. According to a January research paper on home ownership in China from the National Center for Biotechnology Information. Okay, strange place to be collecting that information. But the US, for comparison, has a 65% home ownership rate. Over the past 2 or 3 decades, the price of Chinese real estate has gone up, Sun said. This has generated a popular belief in China that real estate is always safe to invest in. How much do homes in China cost relative to income? The average cost of homes varies vastly depending on the region and city. In China's tier 1 cities like Beijing, Shanghai, and Shenzhen, housing costs around 14 times as much as the average salary. 2020 report from the Lincoln Institute of Land Policy found. In tier 2 cities, home costs roughly 7 times the average salary, the report shows. And in tier 3, 4, and 5 cities, home prices are about 5 times as high as the average salary. Let's put the tier 1. In some tier 1 cities, home prices per square meter are on par with what you'd find in some of the world's most expensive cities, per a Wall Street Journal report that compared prices in China, Tianjin, and London. Sure. Evergrande Real Estate acquired for super large projects in Haikou, Wuhan, and Huzhou, with a total construction area of nearly 4 million square meters and a total amount 13.5 billion yuan. Evergrande, China's largest property developer, is facing a liquidity crisis with total debts of around 300 billion. The problems faced by the company could impact China's economy and global economy at large. How many of those are sitting empty, I guess, is the question. How much debt does an average borrower in China get exposed to in order to buy a home? Household exposure to debt is lower in China than in many other developed countries, but it still forms a significant part of their portfolio. The debt level is lower in China than what you would see in other countries, for example, Thailand or Malaysia. Bernard Orr, an economist overseeing Asia Pacific for Coface, told Insider, Chinese citizens have high savings rate. About 40% of their money goes into savings. Wow. Well, get that all in the record. They also tend to employ personnel lending networks in order to purchase homes. At least 40% of Chinese millennial homeowners receive money from their families to pay for their homes. The 2017 HSBC survey on millennials found. That said, the majority of debt in Chinese households is property-based, Orr said, and household debt has been on the rise since the financial crisis. In 2020, household debt rose to 128% of income, according to a report from China-focused researcher Rhodium Group. At the end of 2018, house-related debt accounted for nearly 2/3 of the average household's total debt, according to 2019 report from International Monetary Fund. Individual wealth in China is also heavily tied to real estate. That's according to Moody's, 70-80% of Chinese household assets are tied to real estate. It's more individual wealth tied to real estate than just about any other developed country, Sun said. In the West, people diversify their investments and the majority goes to capital markets. But in China, where the capital markets are less developed and highly volatile, people keep much more of their money invested in real estate. Household spending on real estate is also high, Orr said. So 30-40% of household spending is going to the real estate sector, be that rental payments or mortgages, for example. This percentage is similar to how much Americans spend on housing, I guess, but okay. Sorry about that. Okay. How is China planning to deal with real estate debt? Beijing is already pressuring government-affiliated developers to buy up Evergrande's assets, Reuters report. On Wednesday, for example, it announced it would sell $1.5 billion of its stake in Xinjiang Bank to an investment company that manages Chinese state assets. But when it comes to controlling the fallout around Evergrande's debts, both Sun and Orr said the government's first priority is the consumer. The government is quite anxious about what this Evergrande crisis means for the average consumer or the homeowners, Orr said, particularly because so much of the average consumer's wealth is tied up in their real estate. It's also why some of the measures taken by the government are so far geared towards helping the consumer first, he added. The priority for the government in managing defaults or bankruptcies is to ensure social stability and negotiate a deal with creditors, Sun said. He outlined 3 levels of priority for the government: home buyers first, creditors second, and existing shareholders last. If you look at the collapse of major companies in China, that's always how the collapse is managed, Sun added. Okay. Interesting. Huge property sector starting to wobble. Don't know what more we can say about that, but I guess it's one to watch, right? Whilst there's all peace and calm out there, this could be a disturbance in the force. Okay. You want to learn more about the way we invest, my philosophy, my track record, hop over to this website over here. Just get it between the comment over there. And come take a look. Come read around. You can see some of the investments we're working on currently, kind of nice niche-based private investments that we like and we have an affinity for. So come visit us. And again, if you like this video, please like it and share it and subscribe to the channel. This is Greg Silverman for Come Learn With Me, out for now.